The best stock to buy right now, according to my calculations and research, is Uber. And Uber's been my best stock to buy for all of 2025. I started the year off with Uber as the best rated stock, and I've continued to recommend Uber as my top rated stock to buy. In this video, I will reiterate that recommendation, update you with my discounted cash flow valuation model, which I'm updating today, March 3rd, 2025. I actually increased the price for my intrinsic value calculation for Uber, and I'll share that with you in this video here, as well as discuss the reasons why I believe Uber is the best stock to buy now. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so according to my discounted cash flow valuation model, I believe Uber's intrinsic value per share is $112 as of today, March 3rd, 2025. And I updated that recommendation, increasing it slightly. I believe before today, my intrinsic value per share was around $103, $104. I upgraded it to $112 because the analyst on Wall Street increased the expectation on what they believe Uber will deliver in free cash flow between 2025 and 2029. Those estimates increased, and so I updated my model here with those updates, and it increased the intrinsic value per share. And of course, the videos of my discounted cash flow valuation models and the members only versions of these videos are available if you join my channel as a member. So the current market price for Uber is $75 per share. The intrinsic value, $112. It suggests that there's considerably more upside available for Uber stock. And if I share with you the company's forward price to earnings ratio at 17.42, it's near the cheapest this stock has been all year. And I think regardless whether I use the forward price to earnings or if I use the discounted cash flow, Uber stock looks undervalued. And I've had this stock rated as a top stock to buy all year. And you can see how it's significantly outperformed the S&P 500 index. Uber stock is already up over 24.5% year to date in 2025, compared with the S&P 500 index, which is only up about 0.5% year to date. So it's already outperformed, and it seems like to me there's considerably more upside. I think Uber's stock is trading at this cheap valuation, and it was trading at an even cheaper valuation to start the year because I think investors got a little too excited about Tesla's driverless car ambitions. And of course, if you believe that Tesla's going to overtake the world transportation and overall people are just going to be taking Teslas for driverless rides in 2 years, then of course you believe that Uber could be significantly hurt because of what will happen with Tesla and its growth. But I felt that those prospects were overstated and overblown. I think Tesla will eventually develop driverless cars at some point in the future, although I don't think those are going to happen anytime soon. And I think even when or if that happens, that Uber's business won't be eliminated entirely. I think there would be, or there could be, a negative impact from driverless car technology to Uber technologies. But I think those are mixed results, as I've said several times now. I think driverless car technology could end up helping Uber as well, because the difference between the total spending on Uber's platform and how much Uber gets to keep is reduced because of how much Uber has to pay its drivers. And if Uber could employ driverless car technology, then that could reduce that spending and it could increase the percentage that Uber keeps. Of course, if Tesla develops driverless car technology, it's not going to be the only one in the market with driverless car technology. Already, there are companies like Waymo, which Uber partners with, that have driverless cars on the road. So Uber can benefit from this technology as it improves. And so I don't think it's all negative, right? I think it could be negative, but I think it could also be very positive for Uber. But right now, the market is pricing Uber stock, or it's almost entirely pricing Uber stock as if it's going to be devastated by driverless car technology. It's trading as if that's an inevitability, which I don't think is the case. I think there's a two-sided situation here where it could benefit significantly. Also, I've liked what Uber's management team has done. Dara Kashkari, the CEO, has directed this company very effectively over these last few years, and the company's free cash flow has grown, its margins have grown, the number of monthly active users on the Uber platform has grown by the tens of millions. And so I think he's steered this company in the right direction, and I'm reasonably confident that the CEO can steer the company effectively, even in the event of the negative circumstance of driverless car technology. The management team has spoken to investors about this, and I've liked what I've heard about the management team getting ahead of this, partnering with Waymo, partnering with other driverless car technologies, partnering with robotics companies in food delivery. And so they've got a head start on this, right? They've got a few years already, and it's going to be at least another year or two before driverless cars are available from Tesla on the roads. And so they're planning, and I'm reasonably confident that they can achieve good success or at least minimize disasters in the event of that case. So I still think Uber is a great business at current valuations. And then if you compare it with the other thing right now, which is car ownership, Uber's becoming incredibly more attractive compared to car ownership. I've said this frequently, and I say this to my university class of students, and I run informal surveys with students about uh, owning a car versus taking Uber, and Uber's become very attractive. You don't need a down payment for buying a car if you choose Uber as your transportation. And then the cost, right? In Los Angeles, at least, the cost of ownership of a vehicle with gas prices, parking, insurance, car payment, down payment, all of that compared to taking Uber, it's like pretty equal. And then Uber is a lot more convenient, right? Because you just call it up whenever you need it versus owning a car, which is becoming a lot less convenient in Los Angeles. Parking is a nuisance, and then traffic is becoming unbearable. And so if you're taking an Uber, it makes traffic a lot more bearable because you don't have to be the one driving. You can be sitting in the back seat, studying or watching a video, doing some work, answering emails, whatever your, preferred activity might be. And so I imagine that being the case for a lot of big city transportation needs. So I've liked Uber's business all year now. And so in this video, I'm reiterating that recommendation. I think Uber is an excellent stock to buy right now at current prices. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book, I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.